Yo, 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 we back again Tuesday, one more time. Last Tuesday of the month, we getting it in. Creative financing with JB. We back at it. You know, we always got something new and improved happening. We have a hostess this week. We talking about ownership, right? We talking about ownership of things you should have, things that's just gonna start to happen. How it is, I got Mr. Damian Snipes, owner of his own Goosehead Insurance Agency, which is a honor and a pleasure to be able to associate with some folks that has that business model and that perspective going on. We're going to learn about some things that's happening in insurance. You know, we talk about we want to build legendary and legacy wealth and stuff, but insurance is one of the ways that we make that happen. And how we make it happen, we're going to find out tonight. We're going to see what products is out there. We're going to understand why it's important to have it. And I mean, using insurance to invest in your future for it and stuff. We see so many things that didn't happen during the pandemic that, you know, people was passing without insurance. They didn't have no way to even get some. We still see people today without insurance, and we need to have it to help sustain us and pass on this. And I lost my words right there, but to pass on our legacy of wealth that we need to do. I'm not going to delay the process anymore. I'm just going to go ahead and have Damon come on and just give you a little background about himself, you know, from it, how he got in this game, what happened to him even thinking about insurance, and some ratio numbers of who have insurance for it. So, Dame, if you can come on and, you know, you can just tell us a little bit about yourself, and we're going to start with the questions.
Thank you very much, Johnny, man. I greatly appreciate you allowing me to be here tonight, man. I'm very excited about talking about insurance. I know insurance is not an exciting subject for a lot of people, but I live on it. I live it. I
Right.
breathe it. It's very important. It's a pillar. It's definitely a pillar of you know, financial strength and you know, and wealth also, and protection. And
Hmm.
basically, again, my name is Damon Snipe. I own a Goosehead agency. I am a broker. The products that I offer is home, auto, and life products, as well as we have business products also. My first foray into insurance actually happened when I was in college. I
Hmm.
had this young gentleman come up to me and say, "Look, man, you want to make a little extra money?" I was always down with making extra money because, you know, I was broke. I was a broke college kid up in DC going to Howard University. I was like,
Right.
man, let me make some money. And I was introduced to this African American owned insurance agency. And it really opened up my eyes to insurance. And after I left there,
Mhm.
you know, I jumped into the car business for a long time, but I never got rid of my license because I knew that insurance was going to be the thing, you know, for me, because I had such a passion for it. So around a little under 4 years ago, I opened up my Goosehead Insurance Agency, and just been here, just trying to help as many people as I can. Not only you know, understand about insurance, understand what they have, but just really, you know, counsel people. You know, because it's not all about the price. So you want to make sure that you have what you need.
Right, right, and that's important. You know, we talking about sustaining ourselves. You know, accidents happen
Hmm.
in the home, in the car, and in life. So, what happened when we have these accidents? What happened when we don't have the cash in our pocket to encounter that? And what do we do? For you know, we're gonna have Damon's information scroll across that bottom of that screen, but we want to be sure that folks understand that the mission is to be able to sustain ourselves, the sustainability right now for it. And then just tell us about some of the home products you have right now. You know, folks might want to know about for their personal home investment properties,
Hmm.
um, their building and stuff like that.
Not a problem. Not a problem at all. Yes, I mean, definitely offer homeowners insurance, and there are different types of homeowners insurance. You have the homeowners that are, just the average person that's buying a home for the family. That's one type of insurance. You have your investors on the other side that are buying properties that they may just flip, or they're
Mhm.
going to actually rent out the other people. You have people that own condos. You have people that own maybe mobile homes. And so so there is a lot of different types of property. And one of the things that I want people to understand is that every property has a specific homeowners form, okay, a type of policy that they have to have. A lot of mistakes I see, is that a lot of people that may, want to rent out their home or rent out a home that they own to somebody else. They may just have a, standard homeowners policy, but guess what? That's not the correct policy. It should be a dwelling policy, because the dwelling
Yeah, we
policies are
got to
policies
pause
for.
right there,
Okay,
and with Damon. But yeah, you got to have that insurance for your home. We see so many things happening today for as far as hurricanes, natural disasters. We can't limit ourselves to what type of insurance that we get, but we need to be coverage, and we need to have the right coverage
that's correct.
for us when we're doing that, um, and go from there. But
Yeah,
go
absolutely.
ahead.
No, no, you're absolutely right. It's just important and imperative that you have the right type of coverage, and adequate coverage. I see a lot of gaps in coverage, meaning that, people may have coverage, but there are a lot of gaps, that if something were to happen, they may get, caught, owing a lot of money to somebody.
Hmm.
Absolutely, see it all the time.
Hmm. Um, and just so we know that, Dame, I mean, what are some of the big things in insurance that we need to be aware of for that home?
The biggest thing right now is that these insurance companies are being very strict with underwriting.
Hmm.
Whereas before, you could just put in an application, or put in an application, and like take the roof, the age of a roof. If you tell me the roof is 4 or 5 years old, no issues. I'll let them know that the age of the roof is 4 to 5 years old, and it goes through. You get your policy. But now, with increasing regularity, they are coming out, inspecting the homes. They have drones, flying over the roof, to check the quality of the roof. And if they don't think that the roof is 4 to 5 years old, they're going to ask you to prove that it's 4 to 5 years old, not only by you telling them, but they want invoices and paid invoices, or they could cancel policies.
Hmm.
So, it's just very, they're getting very, very strict right now with the underwriting. So you just have to make sure, that, wherever you get your policies from, that, the agent is definitely aware of what companies are strict with what types of things.
Yeah, yeah. So that's important as well. We talk about roofs. We used to, some people have roofs for years and don't realize that insurance company's gonna be reviewing that type of stuff. And prepare yourself. If you have some roof work done, prepare yourself to save that invoice, save that receipt, save the contractor information, so we can supply that stuff to that. What about trampolines and stuff like that, Dame?
Oh man, yeah. These are all questions that are on the application. Trampolines, pools,
Hmm.
uh, dogs.
Dog.
Believe it or not, yeah, dogs. I mean, do you have a dog? Do you have animals? If you do have a dog, what kind of dog it is? All these things are asked, and they have to be answered, because again, if the insurance company, if you put in a claim, like say, there's a trampoline on the premises, and it's not fenced, it doesn't have the little gate around it, or they are not aware of it. I mean, I actually had a client that was buying a home, and the insurance company came out, and looked at the home, and it actually had a trampoline in the back, and I said it didn't have a trampoline. And
Mm-hmm.
the new homeowner that was buying the house, it wasn't his trampoline. They just happened to come by the house before the house was closed on, and it was the previous owner's trampoline. So I'll jump through some hoops, just to be able to keep that policy together and let them know, like, look, this isn't his trampoline. So I mean, so yeah, Johnny, there's a lot of things that you may not think about. Even around a pool, the gate has to be the fencing has to be a certain height, or it's not going to be acceptable. Or
Mm-hmm.
even if you have a fence in the backyard, you have to make sure, like, I had one client that the gate of the fence was the actual gate part was broken off, so the gate
Mm-hmm.
wasn't there. Even though they had a fence around the whole house, the gate wasn't there, and they was told that they have to replace that gate, or they're going to drop that portion of the coverage. So it's getting kind of dicey right now, to say the least.
Right, and that's amazing, that we don't know about these situations that happen, and stuff happens, stuff breaks, for it and stuff to that we go around, and sometimes we have to realize that hey, we have to get that fixed. We have to make sure that we do that to have that coverage in place. Tell us
Right.
about these dogs. What's the dog issues for these homeowners?
Well, every application asks, if you have a dog, and then if you do have a dog, there are certain breeds that they frown upon, because they have to know, one, what type of breed it is. Does the dog have a bite history? Because again, when you think about the insurance company, they are always kind of putting everything in a frame of risk. Okay, what is going to be their risk of having to pay out on this particular policy? And unfortunately, in some cases, dogs do bite. Okay,
Mm,
if somebody comes into the yard, it could be it could be the Amazon guy just
right,
delivering a
right,
package. If they got a dog in the yard and the dog comes
right.
out and is aggressive, and because dogs are very territorial, and bites the
Hmm.
Amazon guy, guess what? You could potentially have a lawsuit on your hand. Okay, that's why they need to know. You have to make sure that the applications are filled out completely. Yeah, so these dogs could really pose a risk to your ability to get a decent policy at a decent cost.
Yeah, is a more dogs? Is it a certain kind of dogs or just dogs in general?
No, no. I mean, again, the when you think about dogs with a bite risk, what kind of dogs are you thinking about? You think about your pit bulls, you think about your Rottweilers, your German shepherds, Dobermans. Those types of dogs are going to be the ones that are going to kind of trigger them. The policy may have to go into underwriting to get approval. The poodles, the little, the smaller dogs, or the dogs that are just, their personalities are just very, just, non-aggressive. But again, I don't, I believe that you may have, owners that, make the dog aggressive as opposed to dogs being aggressive. But again, the dogs that you would think that we all kind of think about that, we kind of watch out for if we're walking, like, maybe go to the other side of the street because you don't
Mhm.
know
Right, right,
dogs that, that these insurance companies are flagging.
right. So what happened, Dame? I moved into my house. I bought it. Now all of a sudden, I want to get a dog. Do I need to report that to the agency, the insurance company, or how does that work?
I mean, not necessarily. I mean, you should, but I could guarantee you that. I mean, I've never had anyone call me up and say
Mm.
that, we bought a dog.
Right,
And a lot of times, people don't even think about it. Okay.
right.
But because at the end of the day, if you didn't have a dog when you purchased a house, everything was on the application was truthful. Okay, so if you happen to get a dog afterwards, probably the right thing to do would to inform the insurance company of that particular risk. Okay, but I could tell you that I've never had a situation where somebody called me up and said, what, we got a dog, let me let the insurance company know. But it's
Mm.
probably a good idea to do that, just to make sure that you're protecting yourself.
Yeah, because does that change your coverage if you have it after the fact?
Well, may not change the coverage, but it may change the premium as far as how much the premium is, based on that
Your
risk.
premium.
Yeah, the cost of the policy.
Mm,
Yeah, so those are some of the
that
things
makes
that you
sense.
have to. Yeah, some of the things you got to watch out for. And again, it's other, and just the pools, the trampolines,
Now,
things like
now,
that. Also,
now going from the Mhm. Yeah, so now going from the home to the auto,
hmm
um, we all drive cars, we know that if we have a house and we bundle, we do a bundle on the home and the auto, we can kind of save some money.
absolutely.
But let's talk about that auto. Um, you said that you broker out, but how competitive are your auto rates compared to if I go to State Farm or Farmers or whoever I might go to?
Okay. What you're going to find with auto, when we are very competitive, you have companies that are going to be strictly they can only write their business like a State Farm. A State Farm agent can only write State Farm products. Okay. So they can only do what they do. But a company like mine, we deal with companies that are open to taking in brokers such as myself. Like, I have Progressive, National General, Travelers. I do have Allstate product. I
Mhm.
offer nationwide. I mean, so we have a whole slew of companies, and you're going to find that different companies have different appetites for different types of people. And that's going to be the big thing. You take State Farm. State Farm, they may like a certain type of customer, and guess what? They may have a lot of them out there, but if you don't fit the profile, then you're not going to get the best rates. So one of the benefits with my insurance agency is that I could very quickly put your information in. I will get back 4 or 5 quotes very quickly from these. All of our companies are A-rated companies, and so I'll be able to see who's going to give you the cheapest rate. And we are very competitive, and we are bringing on new companies all the time to keep our competitiveness.
Mm. Auto insurance, we think it can be expensive depending on the age of the driver, number of accidents, So the question is, I haven't had an accident in 4 or 5 years. Will my auto insurance, will that show up on when you go look for me to get auto insurance?
Yeah, what happens is that when we do a quote, and I just want people to understand this, when you get an initial quote, you may see, like if you go online and get an initial quote, you may see some great number. But that number may not be the coverages that you may necessarily want or need. Okay. Then two is maybe before any reports are run. Now there are two reports that are run. One is the clue report, which kind of basically gives us the background on the car itself. Or is the car more prone to be stolen? If it is stolen or if it is wrecked, what kind of cost of all the parts and, to fix it. That's what the clue report will show. And then we have the MVR. Okay, the MVR is your motor vehicle report, which kind of rates you as an individual. So, say you have a car that is not stolen a lot, and then you haven't had a lot of tickets or no tickets and no accidents. There still is a baseline as
Hmm.
far as what the insurance would be. I kind of liken it to like gas right now. The best gas right now might be $2.90.
Right.
Now, you know what I'm saying? Now, you might go to 5 different stations, you might get within 2 or 3 cents of it, but that's the baseline. You're not going to get, if you haven't had any accidents or you haven't had any tickets, you're not going to get gas for $2.30. You know what I'm saying? You're still going to get the best of what's available,
Right.
and then it just goes up from there.
Right. That's right. That's right. Everybody got to pay the price for what it is.
Yes,
And
exactly.
tell us, how does that work with the bundling and the home and the car? Do we have to do it at when I buy my home, or I have a home and a car right now? How does that um, commingle with
Um,
things?
Okay, yeah, bundling definitely will save money. I actually have some companies that will not even allow me to quote you if we do not bundle the quotes, and if you have to buy it in the package, or you will not even be allowed to get their product. That's how serious some of these companies are. But yes, you definitely do get discounts. When you bundle, and say you have a car, you have like say Progressive, and then you buy a home policy to Progressive. Both policies, you'll get the discount for having an auto you'll get a discount for having an auto with Progressive for the home insurance, and then the auto should go down a little bit because again you're bundling now. And the great thing about my agency is because I have so many different companies for both home and auto. There are some companies that even if like say with the home, even if you do not have like say you're with Progressive, and then I write you with a totally different home policy. A lot of times within that application, we'll say, does that person have a auto policy with you? We could say yes, so you still get the benefit of bundling because you're still within my agency. So yes, bundling it can definitely save you money, and sometimes it's a must-have with some of these companies.
And can you just describe the different types of auto insurance we have? I know we have liability, full
hmm
coverage. Can I have liability with roadside assistance, or do I need to have full coverage to have that?
You have to have full coverage to have that, but your liability is strictly, just the liability portion, the personal injury protection, the uninsured and underinsured motorists, and then the liability part. Full coverage as the comp and collision, and when you have the full coverage, that's when you could get the other, the towing. You could get the roadside assistance with most companies. And then also, you have different levels. People might say, well, you know what, I want full coverage, and that's fine. You can have full coverage, but you have to look at the actual limits of the liability. Do you want minimum state coverages? Do you want the full butt load? As far as having the very top coverages.
Mhm.
With the comp and collision, what deductible do you want for comp and collision? Do you want, zero deductible, 250, 500, 1,000, 2,000?
Mhm.
All that will come into play as far as the cost of the policy. So just for saying that you want full coverage, that's not all the same. You got to have more information, and then more importantly, you have to understand, what the different aspects of the policy are, and know how it will affect you. Should you get into an accident?
Yeah. Shout out to Nicole Bruno. She joined us, but I got another question here.
Yes.
The question is, you said state minimums. What does that mean to a consumer right now?
Okay. In the state of Delaware, which is where my home office is we have state minimums of 20, 25, 50, 10. Okay. And what that is that like if you were to cause an accident, the insurance company will pay up to $25,000 per person to take care of their injuries, up to
Hmm.
$50,000 per accident. Okay, total. Okay, so if you have two people in the car, each person can get 25,000. If you have three, then you have to divide the 50 by three, and then the 10,000 is going to be the property damage and what the insurance company will pay to repair the actual property, i.e., your car. Okay. Now,
Nice.
if you think about it, and again, I was in the car business for 25 plus years. The average price of a car now, not only a new car, but a car is in the high 30s, low 40s.
Wow.
Okay, as far as the average price of a car. Now that's just the price of the car, but you know, uh, because they have so many electronics in them, there's so much technology in these vehicles. Case in point, we used to replace windshields for a couple of $100. Now that same windshield might cost five, six, $700 to replace because of sensors that has to be recalibrated in the windshield. You
Mm,
have sensors in the bumper, so $10,000 does not go a long way to fixing stuff. You may fix the other person's car, but your car might be left, all screwed
mhm.
up. And
Right.
Johnny, I mean, we could probably, and I want everyone, as in your day-to-day travels, look at these cars that might be 2, 3, or 4 years old, and
Right.
see how much damage they got on, and they still got damage on them. Like, yo, why didn't you get the insurance company to fix it? A
Right.
lot of the times, they just don't have enough coverage to get their car fixed, so therefore they got to pay the car note and drive around with a car that's damaged, which is not a good feeling.
Wow. So I take it too with saying that my driving record is a key factor for these insurance company and assuming the risk when
Absolutely.
because let's be honest, I'm upset with my insurance company team, and I'm like, man,
Gotta
I'm
call me, baby. You gotta call me.
you know, I'm upset. I'm like, I'm not dealing with y'all no more. I'm switching my coverage over here, and I'm coming to dang, but our driving record can affect that too. If they probably gave us a policy before we had a couple of tickets and stuff, I take it.
Yeah, and one of the things now, Johnny, that they're starting to do is that they're starting to take that whatever happened, whether it was a ticket or accident, they're starting to take it a few years further as far as affecting your policy. So before it might have been 2 or 3 years, now they might be looking at 5 years back in your past. Okay. And another big thing that will affect the premium, and again, you may have a clean record. 'Cause I just had this case today. A person had a clean record, no accidents, no nothing, but they dropped their policy a month and a half ago,
Wow.
and that could be the kiss of death when it comes to increased costs because if you do not have insurance, or say you drop your policy because say you're mad or you're pissed at them, whatever, and you decide to drop it, and then get something else maybe a few weeks later, or whatever reason you drop it, these insurance companies are charging a premium because you do not have constant coverage. Okay, if it's been more than 31 days worth of coverage, they are charging a premium for if you don't have the coverage now. Even with a clean record. So I
Mm,
always suggest people that if you're thinking about changing,
mm,
just make sure you keep your you keep your current coverage, before and then shop. And I tell people to shop around. A lot of people, they keep the policies. They may not know that they're going up a lot, but I tell people to shop. Even if you're my client, I say, look, you can shop with me, you can shop with someone else because my mantra is just to make sure that people have the best coverage at the best price, whether it's with me or with somebody else, because, it's hard out here. And I want to make sure that people get the most bang for their buck.
absolutely. Folks, you see it going across the screen. Damon Snipes, Goosehead Insurance, Home, Auto, Life, 302-450-1794. Call and get that quote, get that understanding, get those questions answered. Like Miss Bruno just said, Nicole Bruno said, hey, a negative credit report can also have a huge impact on your policy. So, you still got to protect your credit when it happens, to know what your credit score is, to make sure that you're getting the best value for it, because it can get costly. That can make the difference of seeing if you can buy that car and can afford it versus getting something you really don't like because of the insurance, because you have to have insurance here. The question is, can I customize my insurance, Damien? Can I just go and say, hey, I don't want this, but I want this, this?
To a certain degree, you have to have, the minimum liability coverages. But say you don't want, uninsured or underinsured motorists, you don't have to have that. Um, there are state minimum requirements for coverage. Like up in, Pennsylvania, which I've read a lot of policies, they have to have a minimum of $5,000 medical in their
Wow.
coverage and their policies that we don't have to have in Delaware. So as long as you're following, the minimum state coverages that your state allows, yes, you can customize it. And again, you could customize it, with the amounts of coverage too. But yeah, you don't have to have, everything in the policy. You can have the very bare minimum that the state allows, to keep it as cheap as possible. But again, on the flip side, you have to make sure and just kind of know that you may be putting yourself in financial risk, should
Mhm.
something happen.
Yeah. And then explain this term, the uninsured and underinsurance motorist protection. Is that just for somebody else that's not insured when they have an accident with you, or?
That's correct. And I'll explain this with an example. My youngest son was driving my car, coming from the gym at the mall. He was at the light, and he got rear-ended by a
Mm,
car that was only like maybe 3 or 4 years old. Come to find out that that person did not have insurance at all. Okay, that car wasn't covered. Okay,
mm,
so now my policy had to pay my car out of the uninsured motorist portion of the policy. Okay, so if someone hits you, they do not have insurance, it's going to be paid out to uninsured. If somebody, like say somebody has minimum state coverages, all
mm-hmm,
right, and say, like we was using that example earlier, like the $10,000 for, the property, and
mm-hmm.
say your car, got 15,000 or $12,000 worth of damage, then the underinsured portion would take care of that gap, that $2,000. So
Mm-hmm.
that's what the uninsured and underinsured covers. And it again, it's definitely has to do with the other driver.
Yeah. Nicole got a question up there too. She said, I asked my insurance company, what does a negative credit report have to do with my car insurance? They said a negative credit report shows that you are irresponsible and they have the right to charge you a higher rate. Then what's your thoughts on that and how that works?
Um, and I'm going to be totally transparent with you. Yes, credit does actually come into play. We do not. I do not collect socials from anybody. There is all these insurance companies, they talk to one another. They have a like a central process and where they gather information and share information with everybody else. So yes, I do know that credit does come into play. I do not agree with the fact that it does come into play and it can affect your rate, because again, it could be for anything. You might got hurt, might got sick, might have lost your job, and just couldn't afford to pay your bills or whatever. That doesn't mean that you're irresponsible. You can have a clean record. I think that your driving record should be more of an indication of how you
Right.
are as a driver as opposed to credit. So I am not in agreement with that. But I cannot honestly tell you how much of a reflection in the rate that a person with, quote unquote, good credit will have compared to someone that may have a little damaged credit.
Yeah.
But you know what? That is a good question for me to ask, and I'll be more than happy to. I'm going to inquire about that.
Yeah, for it. And folks, these are great questions that we find out about auto insurance that we probably never really thought about when it comes to shopping. We want to make sure we get the best rate in the best situation possible. And another question, can I keep full coverage insurance on a salvage car?
Absolutely. Yeah. I mean, as long as the car is registered, yeah, you could have full coverage insurance on it. I mean, they don't. The title would show that it's a salvage vehicle, but as long as the car is registered, yes, you can have full coverage on it. And it has to be actually, obviously, it has to be fixed and able to be registered, so it has to pass through inspection and everything.
Yes. So if I bought Dame, if my car was in an accident and I bought it back and they said it was total, but I bought it back and they said that you have a salvage title now.
Hmm.
Um, I get that full coverage. It won't cover me if I have somebody else hits me and they uninsured, will it?
You said, will it cover you if somebody else hits you and they're uninsured?
Yes.
Well, I mean, if you have the, and again, some companies, will cover cars with salvage titles. Other companies will not, or other companies will may even charge even more if it has
Hmm.
a salvage title. But once you do have your policy, the same policy terms will go for that same car. That even if it was like either salvage or non-salvage. So if somebody hits you, as long as you have uninsured and underinsured motorists, then you will have the coverage.
Hmm. What if I have gap insurance? Will that cover that, or how will that play?
No, no. Gap insurance. The only thing that gap insurance is for is if you were to total the car, you
Hmm.
total it. Okay. Gap insurance is designed to cover the loan. All right. So say you have a loan for $15,000.
Hmm.
Your car is hit, and they say they're going to total it, and they say they're going to give you $10,000 for the vehicle. The
Hmm.
gap insurance is designed to take care of that gap, that
Hmm.
$5,000, okay, to pay off the lender, okay, or the bank, okay. So you won't have to worry about being in the situation where you're still owing the bank 5 grand, and then you have to go back in and buy a new car and put down money and then get a new car and you're still paying for the old car. So that's what the gap insurance is. And but gap insurance has to be purchased when the car is purchased. You can't
When
just
it,
just add it, at any time.
yeah, so I can't come to you tomorrow and say, hey, I bought this car 2 years ago. Can you give me some gap right now?
Yeah, you gotta buy when you buy the car.
So what specialized insurance options are available for people that drive less than 50 miles? I mean, what do you recommend for that? I'm not driving a whole lot in a week, because I work from.
Well, one of the questions that they ask is, how much driving you do. If you do very little driving, then the actual cost will reflect that. Okay, so it's like a discount that you get on the policy if you do little driving. Now, say you have an older car, okay, like a classic type car, okay,
Hmm.
and you might only drive that on Sundays.
Hmm.
There are policies for like those types of vehicles that are going to be, fairly inexpensive, but you can only drive X amount of miles, per year. Okay,
Hmm. Hmm.
so in those cases, definitely it's a much cheaper policy because again, you're just kind of taking it out. It's an older vehicle. You're kind of taking it out, one day a week. But for the normal car that you have, if you don't do a lot of driving, we can make a notation. Like this person may only do 6,000 miles a year or 10,000 miles a year or eight, and you will get a discount based on that because again, you're not on the road as much as the person that might be doing 15 or 20,000. So your risk is going to be much lower. Not saying that the risk is not going to is going to totally be gone, but it's going to be much lower than a person that spends a lot more time on the road.
Wow, amazing. And what's this pay per mile car insurance? Is it a such thing?
Yeah, because there are so many factors. The type of car, where you live, the driver. I mean, there's too many factors to kind of put a pay per car because you could have two people in a house driving the same car and they get two different quotes and they might come back with two totally separate quotes for the same car. So
Right,
so no, yeah, unfortunately not. That's why it's just important just to get a quote and don't just go on one quote. Get multiple quotes because again,
right,
just
right,
like
right.
some companies might be, just kind of, you know, be offering a great deal in with the type of driver that you are, or where you might be located at. You never know until you get the quote.
Yeah, usage based or telematics car insurance. Telematic car insurance, is that more, sounds like
Yeah.
something.
Yes. Yes. The telematics is definitely a discount, pretty
Mhm.
significant too with some companies. I know that Progressive. I mean, I just had a quote today where it dropped down the monthly payment by around between around $50-$55 per month, because they went with the telematics. Now, you just have to, don't necessarily be scared of the telematics, because they don't necessarily track where you're going. What they really look for is, like, say, how aggressive you move from a stoplight to stop sign, how
Hmm.
aggressive your braking is. Do you do real aggressive lane shifting? Those are the kind of things that they look for and that they track.
Hmm.
And again, I'm just gonna have a little confession. I had an insurance company that they had the telematics. I was working in Maryland at the time. I had a little Prius, and I used to be rolling, rolling down 95, going at least 80 miles per hour, 80, 85 sometimes, rolling. But guess what? And again, it didn't affect my my score as far as the speed goes. Okay, but again, they kind of look more or less about. And again, I'm not telling anybody the speed.
Right.
Okay,
Right.
but they really kind of look at, just, do you have severe break-in and how many times it happens? Because, yeah, again, stuff happens, somebody stops in front of you quickly, you're going to have to stop. So they do put in that cushion, but if they notice it over and over and over again, then that's when you start getting dinged. And believe it or not, it's not uncommon that your rates do go up after after your term is up, because they have noticed that your driving does not meet their expectations.
Yeah, and that's so important, and breaking and like Chuck said, oh, that was you, huh?
And they got me on camera too.
So we have that, but we're gonna jump into that big one. What we a lot of folks need to know about is that life insurance. Um, that life insurance is so serious right now. Is detrimental to the families of the loved ones when people transition. People have assets that need to be paid off when something happens to them, and that life insurance. And we have known folks to fail to keep up with it. We have got term policy. People don't got term policies that expire because that's all they could afford at the time.
Mhm.
But I mean, I want to encourage everyone, as I keep saying, Damon's numbers going across the bottom of the screen. If anyone is failing to have home, auto, or life, please give Damon a call, 302-450-1794. We need to make sure we are in a good position when something happens. And life insurance is one of the most important assets that you can ever have, for that will help cover some of these things that happen in the transition of life. That we don't put a burden on the family. And it's also good for investment products too when people's investing. So, Dan, we're going to jump into this life insurance and give us a couple of those things like whole life, universal life. We have so many different type of policies. Can you give us just a quick breakdown of how they work and what they are?
Yeah, I'll kind of start with the whole life. Whole life and universal life is, very comparable. These are policies that you could pay into. They will provide a death benefit, but they also provide a component of savings also. Okay,
Mm,
whereas they will put a certain amount of your premium toward a savings, and then they will invest that. So and what happens is that when you actually they a lot of companies will guarantee a minimum savings amount. What that minimum is going to be dependent upon the actual company itself. But they will, once you get a quote from them, they'll actually show you a schedule as far as what you should expect. With X amount of dollars, for the policy, what you should expect to have saved up or the policy accumulated, by a certain time frame, whether that's 5 years down the road, 10 years down the road, 15 years, 20 years. One thing about whole life also is that whole life is again just that, for your whole life. Once you get it, you can continue to pay for it and continue to pay for it until we expire. Unlike a term policy is more of pure insurance. There are different there are set time frames, whether it be 10 years, 15 years, 20, 25, 30 years. You pay on it. There's no savings component to it, but they do tend to be cheaper though than whole life policies.
Mm.
And then once that policy is done, then you have the option of either getting another policy or getting a whole life or whatever you want to do. But they are set policies. But yeah, cost wise, term is going to be the least expensive, and then the whole life and the universal life is going to be a little more because again, they do offer money that is going to be going toward your savings.
Yeah. So explain this simplified and guaranteed issue insurance. Is that like a whole life or is that a term life or how is that?
Well, you could have it for both. Basically, you could do one or two things. When we think about getting insurance policies, we think about getting blood drawn, saying getting our fluids
Mhm.
checked, having somebody come by the house, or we going into a clinic and getting all that, getting poked and everything. That's like the fully underwritten, okay. But the simplified issue or the guaranteed is when you actually they have a lot of companies now, or a few companies that actually will use just information that they get, the questions that they ask, and they could actually go online or whatever programs they use. They kind of see the medications that you have, your history, where you do not have to take any type of blood or anything like that. And it's like so you're able to get policies much quicker, okay, and without the need of having any type of blood or fluids taken. So
Mm.
that's going to be like the simplified or the guaranteed. Makes it very quick and simple to get the policies. Again, you can have it for both home for whole life or term products, because you're going to find that if it's if you do have to draw blood, they tend to. I mean, that process as far as you getting coverage could be a long time. Okay, it could be
Mm.
weeks, it could be months, just really depending upon how quickly it's going. But some of the other types where they're not doing that, I mean, you could get covered the same day that you put in your application, so it could be very quick.
Hmm. And that makes sense, for when you come to it. What about these insurance policies that have like a cash value on it? What am I looking at?
Yeah,
Is that like a whole life policy
yeah,
or
that's like
something?
whole life, universal life. They have the cash value, and they could be used. They could be used for a number of things. You can draw upon. Once you get enough cash in there, you can utilize that cash. Like say you need a you know money for emergency. You need something to buy a car or whatever. You can get money out of that cash value if you like. And the great thing about it is that it's your money.
Hmm.
It's not like you have to get approved for it. Okay, so but you know there's a couple of things with that. Normally it takes a long time to build up. Okay,
Hmm.
but there are some policy where you could kind of fund them. Okay, and you're going to find that some like say a real estate investor, if they fund a like a whole life policy, where they put a lot of money into it, or they do a deal and they put the proceeds into it, they have the ability to utilize that money at any time, where they don't need the banks.
Mm.
You could just go get your own money. You're not waiting for somebody to approve you because you have that money. But again, that's kind of a
Investments.
different aspect of it. But it is something that is available to you, through insurance. Okay, because insurance, and then you have some policies that say, you're sick. The policy will actually, pay money toward, paying your current bills. So there's a lot of different, aspects to these insurance policies. Just depending upon, what you need. You could get it's called riders. You have a lot of different types of riders that you could get, that will, just really, kind of custom tailored to what you're looking for, that could assist you in your everyday life, without you being gone. You know what I'm saying? So it's not just for the benefit of the people that, that you have as your beneficiary. With some of these products, like the Whole Life Universal Life, they have components where, you can, utilize some of that stuff now, whether it be the loans, to yourself, or different riders if you get sick and stuff like that. But there's a ton of riders out there.
Let's get on to that, the loans part. I'm coming to Damien and hey, I want to get this product that, in the next 5 to 10 years, I have some cash available to, I guess, to as collateral for a loan. Um, what kind of product am I looking at right there?
And I'm going to be again transparent again. I was just, like most people, I didn't even know this existed because I'd never done it before. Actually, I went to an event, around a year and a half ago, and of investors. And they had this one young lady up there talking about, yeah, I did this with my life insurance policy. I did that with my life insurance policy. And I was like, what in the world? I never heard of that. You know what I'm saying?
Mhm.
It was with a whole life policy where, again, they funded the policy, with X amount of dollars. It might be, 100, 200, a few $100,000. But again, the benefit, was the fact that, they was able to have access to this money at any time, and without having to worry about qualifying for it, or asking the bank for it, because again, it's your money. So if you want to pull it out to buy another property, you could use that, out your insurance, policy, and then just pay back your insurance policy. Okay. Or
Hmm.
not pay back your insurance policy, because again, it's your money. Now it will, decrease everything if you don't pay it back, but that's an option also. So, that is something that I'm getting a lot more education on, because I could see it as a, definitely a valuable tool, for people that, may be an investor, where they have the opportunities to really bypass banks. And that was
Mm.
my biggest, that was the biggest thing that I pulled from it. So, that is something that I'm actively, learning a lot more about, but I'm definitely not an expert on it now.
Yeah. Hey, we want to welcome Lisa Clark. She had a question that popped up, for us. Can you have a rider for home care for the elderly, on a policy?
Yeah, I'm very confident that you can. I can't tell you what it's actually called, but yeah, they have riders for almost anything. But I'll be more than happy to find out for you, Lisa, exactly what that is.
Yeah, for the as I say, you see Damon, numbers rolling across the bottom. Damon Snipes at with Goosehead Insurance. He's our own broker at 302-450-1794, for to get it going. Because you have these questions, we have to know how we can deal with it, and we're gonna go to the subject matter experts that's able to deal with it. And what are some of the objective metrics that I can use to make sure the insurance company is reputable? Dame, I'm coming to you. You set me up with this, global humanitarian insurance company over I never heard of. I
Hmm.
know that you work with them, but how do I know they are reputable? I mean, how do I, vet those companies?
Yeah, all companies have a rating. Okay, there's a rating system, put in place. It's like A, A plus, A minus, B plus, B minus, and it just kind of goes down. With us personally, we only deal with A-rated companies, period. Okay, we do not deal with any other types of companies. Now, does that mean that if you were to call customer service for one of these companies, that you may have a bad experience? No, again, we're all human. We're talking to people, but as far as the strength of the company, financially, if there was a catastrophe, will you get paid? Yes.
Mhm.
Okay. Do they have money in the bank? Yes. Are they going
Mhm.
anywhere? No. Okay. So these are the only companies that we deal with. And you're going to find that a lot of types, um, that a lot of mortgage companies will require that you deal with a certain rating of company and, with them being A rated. A majority of times, I haven't seen a mortgage company say they'll deal with a B-rated company. There might be
Yeah,
some out there, but
very few, very few, very few.
yeah,
Chuck said, how do we find out what the company is rated?
you
Where do
could.
we go and look?
I mean, you could. It's very simple because again, this is public. You could just you could Google the company, and as far as Google, what is the rating of this particular insurance company, and 9 times out of 10, you're going to be able to find out because again, that's something that these companies tout, and it's something that they, is standard. Every company, is going to have a rating. Now, the only companies that may not have ratings are going to be maybe your non-admitted companies, and these are companies that are not, uh, they don't have to really register, or they don't have to abide by the state rules. But these are companies that kind of work outside of state rules because they may cover things that the regular admitted companies may not. Case in point, say you had a lot of hurricanes on the coast, or or you get a lot of flooding, and a lot of companies are just not willing to touch it. Just like down in Florida, my mom lives in Florida. A lot of insurance companies pulled out of Florida. There are very few that are still in existence. I mean, you got the state program that is state run, but you have a lot of non-admitted companies. They may come in because again, the admitted companies, they say, look, we're not dealing with it, or the rates are so high. So these non-admitted companies will come in and and um, and they'll actually cover the risk. And they may not actually be rated, but again, the only companies that we deal with, again at Goosehead, are going to be your A-rated companies. You will not get anything less than that.
Wow, wow, man. And that's amazing. We got a lot of information to share, but Damien has more knowledge that he can provide for you. Damien
Absolutely.
Snacks at Goosehead Insurance, 302-450-1794. Give him a call. I know folks out there, you might have some situations that you need some attention to, that you have to get some answers, that you looking to see if you got the best rate for your insurance, your homeowners, your life insurance, making sure you have the greatest coverage. And the best situation to do right now is give them a call, have that conversation, set up a time where you can kind of figure out where you're at, making sure that everything's covered in these parameters. We talk about financing here. A lot of people didn't know about that collateral you can use for your life insurance to fund your next deal, to get it. Also, I wanted to share that the National Association of Insurance Company, NAIC, would help you with ratings too, when you're looking up a company. But our last question is that, okay. And our last question is, where does the name Goosehead come from?
The founder of our company, daughter, thought of that name. She loved geese, and she thought of the name Goosehead, and it just stuck. And we're based out of Dallas, Texas. The founder, his goal is to be the largest, uh, private company. Well, we're publicly traded, but the largest, home, auto, and life insurance company out there, before, in his lifetime. So we are doing great things. We are very technology driven. But yeah, that's where Goosehead comes from. I thought it was kind of when I first heard about it, I was like, man, what is this? But hey, you won't forget about it though,
Right.
because sounds so crazy.
Folks, I want to thank Damon tonight for coming on for Creative Financing with JB. Man, it's an honor and a privilege, Dame, to have you. Glad you was able to answer some of those questions that we have. But folks, remember to reach out. It's Damon Snipes, Goosehead Insurance Home Auto Life, 302-450-1794. That's our time for this week. Thank you so much for attending, but we will look forward to seeing you next week as we always providing resources and answers to any questions that you have. Thank y'all, and we will see you next week.
Thank you, John.